Welcome to the series of videos on fundamental valuation of gold and silver miners, looking at their Q4 2021 results. This series will cover a couple dozen of miners, but only a fraction of these miners will be made public on YouTube, and that with a 1 or 2 week delay. For timely updates on all miners, join us at myfinancesteacher.org. Today we are going to look at Barrick, one of the 3 largest gold miners in the world. Remember, this is a fundamental valuation, where we look at the following valuation factors, including the gold and silver and copper prices, the amount of reserves and resources the miner has in the ground, as well as the costs of extracting those resources, all-in sustaining costs. We also subtract the long-term debts from the valuation, and we do take into account taxes. We also take into account number of shares outstanding, as we are looking at per share valuation here. We also do take into account the time value of money, so we do look at the discounted valuation, and I throw a bit of a secret sauce on insider shares. We look at 3 scenarios for our valuation. The balanced scenario plugs in the gold price of $1,900 per ounce. The conservative scenario plugs in the gold price of $1,600 per ounce, and the optimistic scenario plugs in the gold price of $2,200 per ounce. As it is a fundamental valuation we are looking at, it's likely to work out only in the longer term. So if gold price averages somewhere around these 3 targets over the next 1 or 2 years, that's where we'll likely see the miner's valuation gradually converge. Looking at the reserves and resources Barrick has in the ground, they have 69 million ounces of proven and probable reserves of gold and 91 million ounces of measured and indicated resources of gold. In addition to that, they would have inferred resources as well, but we don't include them into the model valuation, hence making any of the 3 scenarios somewhat more conservative. Barrick has 130 million ounces of proven and probable reserves of silver and 860 million ounces of measured and indicated resources of silver. And Barrick has 12 billion pounds of proven and probable reserves, as well as 12 additional billion pounds of measured and indicated resources of copper. Looking at costs and debt, the all-in sustaining costs for Barrick are at $1,080 per ounce. That's according to their guidance for 2022. Barrick also has under $5.5 billion in long-term debts. In relation to taxes, to simplify things, I just assume a flat tax rate of 20% to all of the miners. Looking at shares and discounted value, Barrick has 1.78 billion shares outstanding, and out of those 0.55% are in the insider hands. I include this into the model as a larger percentage held by insiders is a positive sign due to the incentive alignments and because the insiders are better aware of what's happening to the company. For the time value of money, the proven and probable reserves are likely to last for around 16 years at the annual production as per guidance for 2022. If we add only half of measured and indicated resources to these proven and probable reserves, then the life of the resources and reserves increases to 28 years. And when looking at discounted value, we use a discount rate of 5%. Let me know whether that's appropriate for large gold miners such as Barrick. Before we look at the actual valuations, let's have a look at highlights that are interesting but are not included in the valuation. Cash balance for Barrick is at nearly $5.3 billion. Having enough liquidity is a positive sign, helping miners to avoid the destiny of Goldcorp, which, if you remember, used to be one of those largest gold mining companies in the world that experienced a bit of a liquidity crunch, and as a result of that, they don't exist anymore. Additionally, Barrick expects about $1 billion in buyback of its shares for 2022. So that is likely to provide significant support for the share price. And remember, that's in addition to what our model valuation suggests over here. Finally, looking at our valuation, starting with a conservative valuation, where we plug in the gold price of only $1,600 and the corresponding silver and copper prices based on the relevant ratios. And we only look at proven and probable reserves in the ground, as if there were no resources that the company had. So this valuation is rather conservative, as you see. And what we do in the calculation is we look at the discounted per share value after all-in sustaining costs, long-term debts, and taxes, which in the case of conservative valuation is $13.44. It's quite a bit below the ongoing market price, but if gold were to drop out of bed here and just go down to 1600, this shows the approximate level of risk with investing in Barrick. Looking at the balanced valuation, we're going to plug in the gold price of $1,900, and we still only look at the proven and probable reserves in the ground without taking into account resources that the company has. As usual, the discounted per share value after costs, debts, and taxes is $22.15. This is actually pretty close to the market price right now, so it seems that Barrick is now relatively fairly priced. And as investors, we would usually look for value, trying to invest into undervalued assets and reduce our positions in overvalued assets. Looking at optimistic scenario, we plug in the gold price of $2,200 and we include the proven and probable reserves as well as only half of measured and indicated resources that the company has, which is still, as you see, relatively conservative, as we don't even include any of the inferred resources. Looking at the discounted per share value after costs, debts, and taxes, it's going to be somewhere around $41.58. So if you agree with me in expecting gold to go far beyond $2,000 over the next 1 or 2 years, you might still see a lot of potential in Barrick share price. So these are my views on Barrick. Let me know whether you agree or disagree with these valuations down in the comments below. Have a nice day. Bye-bye.